All right, you guys, we are officially 1 week out from a lot of my main earnings trades, and earnings went very good. I was actually able to make 4 figures off of earnings, and earnings trades are not normally something that I do. Obviously, I am more of a long-term investor. I am a value investor, and obviously I do like to short. But in today's video, I want to talk to you about the 4 strategies that I used in order to stay profitable and make trades based upon earnings. Let's get it. You guys know what it is, all today on Young Money Investments. You know, I should probably do something a little bit more formal for this video, so why don't we, much better. There we go. A little more appropriate. As I was saying, we are going to be going over my options as well as the shares that I was holding through my earnings report. We're going to be talking about the strategies that I used and why I did trade earnings. While I normally don't recommend or condone having earnings trades, specifically trying to make money based upon what the company is going to report at earnings. One more important thing, you guys, during the course of this video, if you have not done so already and are watching this video, it's important to click over here or in the description and actually watch my previous video talking about the earnings trades that I was going to be making. I want to discuss some of those and talk about the positions that I actually did end up taking and why I didn't end up taking some of those other positions that I talked about. Positions such as AMD, I believe I talked about Tesla, I talked about Apple, and I also talked about Under Armour, and I want to talk about why I took my position in EA. All right, you guys, so taking a look at the charts here on AMD, this is one that I had talked about as a potentially good buy. Now, the reason I did not end up taking a position on this, and it was a very good thing, because AMD actually did end up missing earnings and has definitely sold off. I mean, we're talking a nice, I'd say about 15% slide since earnings. And the big reason for this, well, I guess I'd take that back. Earnings was probably a little bit less. Yeah, about a 12 to 13% slide. The reason that I did not take a position here on AMD was because of the fact that I was not buying the hype. One of the things that you'll notice here on AMD is that literally we're talking about just back here in March. I mean, we were all the way down there at like low 20s. We're talking about over a 60% run since March. This for me does not go anywhere near that type of value investing strategy that I have really mastered when it comes to swing trading and longing positions. The value for me definitely wasn't there. Although I did think that AMD could continue upward and could continue moving forward because of the manipulation going on in the stock, it was not for me personally a very good buy opportunity. One thing that I always tell myself is it's important to not believe the hype in a company. Whenever I'm doing a fundamental analysis on a company, that is looking at the previous earnings reports, looking at the P&E ratio. I'm looking at all sorts of things like how much their net income is, looking at some of their growth quarter over quarter, all those kinds of things. The thing that I really think is important is you need to not believe the hype. Look at the stock price and see the way it's getting pumped up and actually go with what the fundamentals are saying. If you're going into earnings just, listening to all these people say, oh yeah, it's going to crush earnings, it's just going to go out of the park, you're going to get burned. And that was unfortunately one of those things that did happen for people that were actually trying to play earnings here. And if you would have bought calls or if you would have bought stock here, you're definitely down right here at this range. Now, with that being said, one of the things I do want to point out with AMD right now is I do think that this is a very good level of support to buy AMD at. In fact, I did not get into AMD today. Mondays, obviously, this is going to be filmed on you can see this thing on a Saturday. Monday, usually stocks tend to sell off. If we can get a double bottom and a confirmation right here at this $29 price point, I would say it's a buy, you guys. I would really say that AMD is looking very nicely, especially because right here you're getting a price channel going all the way from down here at $29 all the way up to about $34. That offers a percentage return of about 18%. And with that, you can see where it had topped out once, topped out twice, and we see a third top out. That is a triple top up here. And we've seen several instances and indications that right here at $29 is a good level of support. You can see right here, it has acted as resistance in the past, and it has acted as support here as it pulled back a little bit, and then obviously right here. All right, you guys, the next ticker we're going to be talking about is ticker symbol AAPL, or Apple. This is a strategy that I held through on earnings, and it actually did not play out for me because Apple ended up rising. Now, this is going to be not trading overbought companies, and I did this with both Apple, AAPL, and Under Armour, ticker symbol UA. Both of those were on my radar going into earnings, but as we can see here, one of them I did good not buying it, and that being Under Armour. The other one I did not do good in not buying Apple, and the reason is still I didn't do good in buying Apple because it did pop. As you can see right here, we are seeing that at earnings, basically, Apple is able to rise right around 7%, and since then we have definitely seen it come back down. The thing with this trade though, and this is one of the reasons I did not end up getting into Apple right here, is because even though they beat earnings, which was really good for the overall markets, this is not a good pattern or a good sign to buy right before earnings when your RSI is so overextended. Yes, right here it wasn't really that overextended, I guess, before, but when you are at this price channel, when you're at this top of a price channel, and we can even go back on the 180-day chart here, I mean, you're talking about buying at the very top. We could even look at this on a 1 hour chart, or sorry, 1 year chart. This is overextended. This is definitely up in that higher echelon and not a good buy. And so I ended up not taking a position in Apple. I could have made 7%. That would have been good for me, but it was all about sticking to the principles and the fundamentals that I believe in order to actually believe in the trade that I'm taking. All right, you guys, so the other one I'm going to be talking to you about that is really important in following this rule of understanding the company's fundamentals and not buying into the hype, and understanding risk versus reward. That's going to be actually my third step, still 3.5, fourth rule that I want to talk about, and how I made money in the earnings, and that is going to be Under Armour. So as we take a look here at Under Armour, we can see obviously from earnings, we ended up selling off roughly about 20%. I think after the bounce, I take that back. This was probably the bounce here. So, we ended up selling off right around, 19%. I think when it opened up the following day, it was only down about 15%. So it was about 15%. So not as bad. But the reason, and even though I was bullish on this, the reason that I did not end up taking a position in Under Armour was because of how oversold it was in the height and the point where it was in my price channel, where it was at all the way up here at support. With it being up here at support, with it being up here at resistance, obviously it's not down here at support, it's at resistance. What's going to happen is it has to have a very large catalyst to break it over that point. And when earnings really weren't that great, you were flipping a coin. You were flipping a coin on that, and we were wrong, and it ended up pushing back down. And so really trading on a 50-50 standpoint on Under Armour was really not the best way that you could possibly trade. Anytime that you're trading and you have 50-50 odds of something going up or down, guys, that's not good. You do not want to do that. So that was kind of my thing with taking a position in Under Armour. All right, you guys, last but certainly not least was my play that I ended up actually taking and having before earnings. I actually ended up doing something called selling put options, meaning that I was bullish on a position. Now, if you don't know what that means, you can always check out my Discord group. We had a nice little conversation in there about what it means to sell put options and how that all works. So you actually make money when the time decay goes down. That is a whole other topic, but let's take a look here at the chart here on EA. Obviously, this is the 180-day chart. This is the past several months. This is back in July. So we were at the beginning of August. This is a little bit over a month. Well, this is June. So June, July, into August. We're about 2.5 months showing on the chart here. As you can see, this is right when we had earnings. Earnings was trading right down here around $87. And I knew that it was a large level of support. Resistance being up here where I saw right at about 91, 92. After earnings, we were definitely well above that. We continued the following day, and the following day up here at about $96 a share, and that is actually where I ended up buying my puts back and making about a 91% profit. I'll even probably post the picture somewhere right up here or right up here, and that was my profit that I ended up making on on EA. I also made a pretty fat, nice return. Like I said, it was a 4-figure return in total by actually buying some more shares and then selling them right here that same day, just because I knew this was definitely, again, RSI indicating that it was over. This was like RSI was right here at about a 70, 71, and knew that it was about time to take my gains on this. One of the things I want to say going forward though with EA, I see this right here as a very good optimistic pattern, seeing that it has had some pullback. If you pull this up on the 20-day chart here and really take a look at the chart history, I think EA is offering again a very good opportunity for a buy. Yes, I said a good buying opportunity. If you are able to pick up EA anywhere right here between $91.50 to $90, this is going to be a fairly good range to end up picking up EA for the long run, for actually being bullish and watching this right up. The reason that I do say that is because if you do pull this up again on the 180-day chart, we zoom in a little bit more here, you're gonna see that this level right here at 91.55, between $90, I'd say basically anywhere between 90.50 to 90, it's about what, 92.50. So 90.50 to 92.50, you're gonna see a good little range of where it has been acting as a level of resistance, but also acting as a nice level of support as well for this ticker. So anytime you can pick it up, and again, I'm gonna zoom in a little bit more here. If you can pick it up right, and I'll even zoom in a little bit more, if you can pick it up in this range between 92 and 90.50, this is a good buying opportunity. Anything below, you're gonna be probably needing to cut your losses, but that is my recommendation if you are going with EA. And there you go, guys. That is how I was able to make 4 figures on trading earnings and actually picking the right positions that were worthwhile, that met my specific criteria when it came to RSI, when it came to being within my price channel, and especially not being too high up there towards resistance, and buying down when they're closer to support, when I'm able to mitigate and take a little bit less risk. Because if it does start to sell off, that means I need to get out right then and there. It's breaking the pattern and I need to get out. So that is really what I did. If you have any questions, if you have any other suggestions, like I said, Under Armour is a stock that I could see becoming a good buy here fairly soon. Gave that recommendation in this video, talked about EA. I think I will be picking up more EA. Usually Mondays we do have sell-offs. EA is looking like a fairly decent one. And then like I said, I think the other one was AMD. I honestly and truly do think AMD is primed and ready for a nice little reversal again. So check out the next videos. I hope these stock insights were helpful. If you have any questions, leave them down in the comments. Check out my description. You can join my private mentorship if you'd like. There's also the private chat room and all that good stuff in there. And I just love teaching you guys, helping you guys out, and I love having you guys a part of the community. If you've not done so already, hit that thumbs up button, subscribe, hit the bell notification, and I will catch you, yes, you, and you, in the next video. Talk to you guys later. Bye.